Folks, the dump continues. The market is dumping again, and I'm realizing that ever since I started the channel, maybe one video out of 3 is about the market nonsense, the market dislocation. The 2020s have been littered with nonsense, littered with market action that has nothing to do with fundamentals, and this is markedly way worse than during the 2010s. I was investing during the 2010s. It wasn't nearly like that. The market is so fickle. It is literally always looking a few days ahead. Like right now, I'm trying to understand why it's dropping. And apparently, yes, some data on the jobs from September is getting released on Thursday. And because of that, we're dropping. Or I don't really know what's going on. It's a complete mess. The paychecks are hitting the bank accounts, so the bank liquidity problem should be subsiding. You know, the government reopened. Millions of people are, well, more than 1 million people are getting their paychecks. The liquidity is hitting the banks, and nonetheless, everything's dumping. I cannot find a rational reason as to why everything is dumping. It's entirely irrational. You know, even Tesla, if you look at Tesla this morning was up, more than 4% on an outstanding new price target from a respected analyst. It lost everything, right? It lost everything during the day. Many of the stocks that were up in the morning actually lost everything. This market is just looking for a reason to dump. And I have no idea what is dropping. I can tell you crypto fear and greed is still at the same level that it was 3 days ago. So we're still in extreme fear. That hasn't changed. That hasn't rebounded whatsoever. What has changed, though, and we seem to only be correlated with stocks to the downside, what has changed is that now it's the CNN stock and fear and greed index, which is at probably the lowest level since April, if not worse than April. If you look, we're at a 14. We're at extreme fear. I can't explain it. This is nonsense. I don't know who is selling. I don't know what is going on. I know that the liquidity, the banks should be breathing today, and the last paychecks will come tomorrow and Wednesday. So until Wednesday, the liquidity should be hitting the banks. Okay, so unfortunately, we wait until Wednesday night because we have NVIDIA earnings on Wednesday night, and the market's going to make a whole fuss about this until Wednesday night, and it seems like the market is supposedly, at least that's what the commentators are saying, we're supposedly fearful about a no rate cut in December, and I guess we've had a slight change from Friday, like okay, we went up 2% in the odds of no change. We were at 52%. We're now at 54%. Like, is that really the reason? I mean, to me, if I look at these odds and I add, of course, the odds of those people who think there's going to be a 50 basis point decrease, I'm looking at 52% chance no change and 48% chance that there's going to be a major change, right? So it's 50-50. Yet the market is dumping as if we were sure that we were going to get no rate cut. I mean, to me, this is 50-50, like right now, and even then, I guess we'll know more on Thursday when they release that jobs data. But that data is going to be outdated anyways. That data will be outdated anyways. The job market's not doing well. The reason the market is fearful is because we have Powell, who is not data dependent. He was data dependent until November 2024, and after November 2024, he stopped being data dependent because he said, "Oh, tariffs are going to increase prices," and now we're forward looking, right? So it's a politically motivated decision or a politically motivated fear that it just keeps the rate steady. But if you're a long-term investor like me and you look a year ahead, you know that on May 26, he's gone. On May 2026, we're going to have a new chair, Mr. Dove. His name's going to be Mr. Dove or Mr. Dovish. That's going to be the name of the new chair. We're going to get enormous rate cuts. Trump is going to choose the most dovish of all doves to be at the Fed. Like, right? So it's like, so the market's just looking for short-term reasons to sell. I guess institutions are trying to make us sell our bags. They're trying, a lot of retail, I guess, is leveraged up. And so they're trying to provoke liquidations, I suppose. But, and of course, your favorite growth stock is likely way down today. Right? Okay, if you buy a big cap, like if you buy a big expensive stock like NVIDIA is only down like 2.8%. But if you buy a hyper growth stock who's a smaller market cap, I mean, you're feeling the pinch today. And I'm using 3 examples of stocks that, in my view, all 3 of these stocks had outstanding earnings. The Q3 for all of these stocks was awesome, really, really outstanding. Zeta had a great Q3. You may remember the pop on Zeta. Down 7% today, down 16% ever since that Q3 in 5 days. CorMedix had an outstanding Q3. I covered it on this channel. It's down 19% from that Q3, down 10% today alone. For what reason? I mean, this stock is not linked to the economy. It's just freaking. I mean, it's Medicare reimbursing most of the products of this stock. It has nothing to do with the economy. There's a liquidity problem. And then HIMS, everybody was surprised to the upside for Q3. Nobody expected HIMS to have such a good Q3. And the stock is down 7% as I speak, 44% since October 15. In many ways, a lot of people in my comment section tell me, oh, strategy's been performing poorly. Well, HIMS has been performing more poorly than strategy, and they did everything right. I mean, they had an outstanding quarter, and it's like they're down. So, of course, CEO of HIMS, HIMS CFO, the team over there, approving a $250 million share buyback program. Of course, that is a wonderful idea because all of these stocks are way too cheap and the market makes absolutely no sense. You know, I'm not arguing with the market. They give us the dip, we buy the dip. But the 2020s have been characterized by just buying the dip. This has been the 2020s. It's like if you're not a long-term investor, you're hurting in this market. If you're looking to retire anytime soon, you're hurting in this market. If you don't have cash flows coming in where you can keep buying the stocks, you're hurting in this market. It's just so annoying. And lastly, it's MicroStrategy, right? Let's talk about MicroStrategy. Actually, MicroStrategy holding up, I mean, given the circumstances, we're holding up pretty well. I could have assumed strategy would be down 10% today because Bitcoin is down 3%. We've had many days like this. No, strategy dropped so much. It's now at a 0.92 MNAV, so it's holding up pretty well. But unfortunately, Stretch is down, which makes me think it's kind of a liquidity problem. The strategy stablecoin is way down despite having had such success over the past week. It's so much down, and if you know anything about this asset, of course, it kind of looks like free money because this asset is designed to go back to 100. So it's like, okay, well, you have $6.20 of free money here, technically, if you believe in strategy, if you believe in Bitcoin, if you believe in the story. But this dump has been relentless. It is testing our patience as investors. Of course, if you just started investing, you're probably annoyed. If you've been investing for the 2020s, you're like, here we go again. Here we go again. Can we at least have 6 months where we can catch a break and catch our breath for 6 months? Is that possible, Mr. Market? I'm not so sure. Anyways, this was not investment advice, not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.